Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Loreen Gilbert, CEO of WealthWise Financial, to discuss key themes she's watching in the markets as investors start to position themselves in front of the election. It's great to have you with us, Loreen. Welcome to Trade Talks.
Thank you.
What are some of the market tailwinds that you're seeing right now?
Well, as bad as Q2 was, it was better than it was expected. And 83% of the S&P 500 surprising on the upside. So that's definitely a tailwind. If we also look at the Fed's policies, we know that's been a tailwind that's been helping these markets even go higher. So definitely Fed policy, even with this newest idea of moving the inflation target from a target to an average, we see that still being tailwinds in the market. So we see also, if we look at the economic data that's been coming out, everything from jolts to GDP numbers, even as bad as they were in Q2, looking at some great numbers going forward in Q3, as well as even the small business index, NFIB numbers. So a lot of good things that we're seeing in the economy.
Well, 2020 has certainly been the year of the haves and the have-nots when it comes to stocks. And of course, COVID-19 accelerated those trends in place for both the winners and for the losers. What sectors are you most interested in, and which are some that you're avoiding?
Yeah, I think as far as sectors are concerned, as we've been in a recessionary mode, we've been looking at those defensive moves like consumer staples and healthcare. But even if we look more broadly, healthcare we see as a continuing trend, just given demographics and where we are with our demographics for our society. So we see healthcare as continuing to be a great place to be. As far as areas that we might want to avoid right now, if you just look at energy and what's been going on the past couple of days, I still think energy is a place to wait on and not get too exuberant about, as we still have instability in the energy sector.
And how about bonds? There's this narrative that U.S. equities are doing well as a result of a low interest rate environment, of course, where you're going to get yield and return, but there are in fact some bright spots in fixed income.
Right, so I would say to investors to look at fixed income as the ballast alongside your equity positions, because we are in a low interest rate environment. But if we look at what's really been working this year, TIPS, Treasury Inflation Bond, protected bonds, have been doing quite well just because of the low expectations of inflation. So there are certainly good areas to look at. We're being cautious with high yield and keeping our credit quality high, just because we see a lot of risk still with companies, more companies probably announcing bankruptcies. So I don't think we're out of the woods, especially on fixed income. I would be cautious and keep that quality high, but there certainly are areas of opportunity, like you said.
Let's kind of keep on that theme of bankruptcies and go back to economic data for a moment, because on the surface, it seems to be recovering. But if you dig deeper, there certainly are headwinds to be aware of. There are some industries that will never recover from the job losses with COVID-19. Unemployment will be there for a bit longer. Defaults are going to start to show, as you had mentioned, without this heavy veil of aggressive fiscal policy. So there's a couple questions here. How confident are you that a fiscal stimulus agreement will be reached in the short term? And what happens if these packages simply stop? How much longer can fiscal stimulus go on?
Right, so a headwind would be if we don't see a fiscal stimulus in the month of September. I think markets will definitely react. We are expecting both sides to come together and for us to see some legislation that gives relief to the economy again. So the economy needs it. And especially, like you mentioned, the areas that need it the most are the areas that got hit the hardest. So your entertainment, your travel, the hotels, the airlines, the restaurants. So for the small businesses, we need another PPP package for those most greatly hit. And then for publicly traded companies, I think there needs to be some attention paid to these companies that are going to have a harder time to recover. So certainly that would be a headwind if we don't see it, but I am expecting a package in the month of September. I don't think either side wants that headline, given that we're in an election year and drawing closer and closer to an upcoming election. I think that both sides will eventually come together. So other headwinds that we see are the fact that we do have at-risk companies. So I would say to investors on the equity side, to be looking at balance sheets, to be looking at what companies have the strong balance sheets and have been responsible with their debt. And we see the ones that have not been are the ones that are filing bankruptcy claims. So to be aware of that.
And to wrap up here with the election, what are some risks that you're watching on both sides of the ticket as it relates to the election, or does this come back to the economy at the end of the day?
So I think on both sides, I think the idea of antitrust is an issue to look at, because we saw the Department of Justice just this last week announced that they're moving forward with antitrust measures. And I know the possible, the Biden side as well has discussed antitrust. So either side, we need to look at that. And that affects some of these large cap tech momentum companies that have been in the news so much lately. And then as far as other things to consider, taxation. No matter what, eventually we see taxes going up. No matter who wins in office, eventually taxes will have to go up to pay for the stimulus. Maybe not in the shorter term if the incumbent wins, but certainly in the longer term. So we're telling investors to look out for what are ways that we can think long term about their taxation on their portfolios.
All right, Loreen, thanks for the insight and thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.